Ladies and gentlemen, once again, we are back with them Hollywood trades. Nasdaq, I did want to just do one more update today on Nasdaq. Indices basically all the same. Buy side liquidity right here. Easy target. We've been framing this target for days, right? We're really framing highs are just easy target. There's no imbalance directly attached to it. The imbalance is actually, so the next buy side, the next issue after this is going to be this, is where, because if we get a bearish close on the 4 hour after that level there, that's what's going to determine our next buy point, which should be somewhere around here. So I just wanted to do some live markups. I'm going to do a live markup situation here on this one right here. I'm going to go ahead. This is going to be at that level. Around this level is where we want to look for our next long entry, right? There's too much on my chart. Everybody knows I like my charts clean, even though to me, there's a lot of stuff still on my chart. I'll be glad to turn this into a bullish break of structure like this markup here. I'm going to get rid of this Reaper. I'm actually not even going to get rid of it. I'm just going to pull it back because it's just too much for my eyes. We already used it, right? We phased through it and then used it as a fulcrum. And then we went up there. A lot of liquidity, basically, in this whole range. Above the algo SRs, these algo SRs are very interesting places. You can see a lot of times the price will stop dead on them. That's how I get these algo SRs. I just find places where the price stops bodies and stops highs and lows pinpointed, and I draw those as algo SR. They're not zones. They're actual particular price levels like this one here. Boom. Body, right? Low, right? So that's just a little bit about that. Other than that, our next algo SR is up here, and our imbalance is here and here. So these are just plain levels we expect the price to correct these bearish inefficiencies. These are zones inefficient in bullish order flow, or not paired. The orders have not been paired properly at that level. That's why we expect it to systematically go. These type of moves are not really trader oriented moves. They're more so IPDA, clearinghouse type of situation, that bots, high frequency trading, all that stuff is kind of combined up in one to make price kind of reprice to these, what they call levels that need to be corrected. And so I just wanted to do that real quick because I'm expecting to do my next long. Whenever you get a stretch of price like this, you wait for it to pull it back to the origin, right? To get some good lows. There's going to be a low here, maybe. We've got 58 minutes to this candle. So yeah, there's going to be a low here. And then there's a low here. So basically, I'm not going to put that as a target yet. I really don't even want to use this low, but this is the only low that exists right now. This is the only liquidity level or take profit level for shorts. Like if shorts do come down, they'll use the lows as take profits. And then what you'll get inside the bearish candle, as I always say, you're going to get mitigation, people trying to mitigate those losses who got stuck in a bearish move here, as well as this bearish order block was probably a little bit of liquidity left inside of here. So this can be used as a mitigation block. So we want to use this midline, this top, this imbalance here. I'm not even going to draw the imbalance. The imbalance is going to be a blue zone. I'm not even going to draw it. Because what I'm interested in is how it treats this low within this imbalance and how it treats these lows, because those are going to be where your buy point at. Just like we went below, this is the imbalance, but this low right here is what was charged. This was the mitigation point, this wick. Precisely 50% of that wick was the sharp mitigation level where price was able to do a massive liquidity exchange. And of course, this break zone right here as well. So this is a broken zone. It retested that zone. That's all it did. And then again, we already outlined why this was the first target, and then this was the second target for me on the session. I had no idea. You never really know if it's gonna cause a deviation. It doesn't matter. I mean, we do have the target here, but it doesn't matter if it causes a deviation. Most often, you can get so many pips between here, and then it's going to dip into this and recorrect most of this anyway. We want to watch the 50% of this gap. We want to watch this top broke this break point, which is that I'm not even going to mark it because I have algo SR there already. So I'm already knowing that these levels, anything below these levels now is going to be a potential buy point. And so I'm going to take this off. I'm actually, it's usually the low of the highest candle that you don't want to close under, because once you close under that level, that becomes a bearish order block. So probably going to float up the rest of the night. That's usually what happens. If it does take a direction, it'll usually kind of just meander in that direction and reach some goals here and there, which are these. And then as market is coming to New York, we always see that drop down. We always, for whatever reason, and you actually might get a rally up. It might clear this and then drop down. And tomorrow might be just a doji or maybe a slightly bearish, but not this low. I don't expect this low to be closed under. So what I'm going to do is, this is a devilish testing point. We don't know what's going to happen there. Might turn into a bearish level, might turn into a bullish turtle soup, which is bullish soup. When price comes down, fails to close below it, and then you get your entry and you target the highs. And that's pretty much that. I just wanted to just, I don't know if I mistook that someone said that I was looking at the chart in hindsight. I think I mistook that one. If so, I apologize for that, my mans. But this is all like scripted ahead of time for me, at least. People think, I don't know. I don't know what people think, but either way, I use the same levels every single time. This is my buy zone every single time. This bearish candle is my buy zone every single time. And we target the trending breakpoint. We, even in divergence, even if the volumetric divergence did kick in where there wasn't enough volume in this next rally to sustain a deviation run, you still expect that deviation to break the trending breakpoint. That is the secret to a trend, because you're going to get that even if the volume is low. You're still going to get that trending breakpoint, and then it's going to sink back and then target lows, right? This is the nearest swing low. So this is a potential future target, and there's imbalance down here. So we can come up, come down, come up, get that divergent swing, which is another long, and then come down below this target. Like I targeted these on the dip, same way here. This is a swing low, future target point and future imbalance that the system may want to collect orders from. This mitigation zone right here, if all of these shorts are still stuck, there was a lot of them. That's why we got this reaction. But basically, there you go. That is the next couple moves. And we can just keep going up. Obviously, if we keep using these lows as large buy points, we can keep going up. And this is the point of control here. The point of control is still way up, and the all-time high is above the point of control as well, which is way up here. So this is the actual value area where price is going to kind of just pull back towards magnetically anyway, because of the amount of orders that are there. And so this whole parabola from this drop to this height, I mean, we always expect this is a bullish asset. So this was already a future target. So anybody who was accumulating longs, even here, if you could survive this manipulation here, this is a future target. So you can accumulate longs here, thinking it might get here. If you're not a terrible trader, if you're just a value investor, right? This dip below lows, and then you buy, and then it drops some more. If you got that type of money, boom, you wait till that bullish candle again, start buying, come back, start buying a lot more. This is the billionaire's entry right here. Start buying, right, off the test. This whole drop zone right here is a mitigation zone. This block right here is a mitigation block. So past the middle of that block is going to be very strong billionaire entry because that's a Fibonacci retest. Boom. So now you just got a lot of these orders now, long, 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 long. This is the ultimate target right here for this run up, just to recover this drop point. And then you have the imbalance, and then of course all type of more imbalances. These are all targets now. Like that's why they leave them like that. They break and don't retest or recorrect these on purpose, especially during a drop. You don't get a lot of correction of these, and it happens both ways too, because you won't get correction of these because they're leaving them as support now. So now these zones, this zone right here is going to be a super strong support that it can always come back to and get a super good discount buy. And that's just how it goes both ways. So that's pretty much it. We'll come back to this one. I mean, it looks pretty straightforward to me. I did stay on the 4-hour on this one, but you can clearly see the daily does not have much markup. We did balance this zone right here today. So today we balance this, and you see what happens. We love what? BPR, balance price range entry, candle range theory exit. So basically using the candle ranges and using the imbalances, recorrect those, and then you continue after that. We are expecting, maybe this to become another imbalance, and then we'll do the same thing once we dip below this low, and we don't want to close below it unless we're really going to be bullish, and then we're going to target these lows if we do go bearish. That's just what I always say. We are going to go ahead and call that one. It was a pleasure. As always, share this with someone who is in need of real assistance. And I am out.